Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 8th, 2025, we're putting Amazon, ticker symbol Amazon, under the microscope, exploring both the latest news and its recent chart performance. Let's begin by looking at the broader market context on the daily chart. Starting with current events, a significant piece of news is Amazon's reported first link-up with OpenAI, which has clearly won cheers on Wall Street, signaling a positive sentiment for its innovation strategy. Additionally, Amazon Web Services, or AWS, just opened 2 new data centers on August 7th, part of a substantial $3.5 billion investment from 2023. This long-term infrastructure commitment underscores Amazon's continued growth ambitions in cloud computing. Noteworthy comments from Jim Cramer highlight Amazon having all the money in the world, suggesting strong financial backing. However, it's crucial to acknowledge that Amazon's stock recently got pummeled, reportedly down 8% in pre-market trading on a prior earnings guidance miss, prompting the question, buy the dip? Now, let's correlate these headlines with the daily chart data, particularly focusing on recent price action. Following the mentioned pummeling, we observed a significant decline in late July and early August 2025, with Amazon dropping from highs around $234 on July 31st to a low of $211.65 on August 4th. This sharp downturn, a nearly 10% drop, created a strong buy the dip scenario for many investors, aligning with discussions in the news. However, a strong rebound quickly followed this, demonstrating significant buying interest at lower price levels. The rally from the August 4th low saw the price climb back to $222.31 by August 6th, and currently rests at $223.13 as of the market close on August 7th. This swift recovery suggests that despite the short-term negative reaction to the guidance, underlying bullish sentiment, possibly fueled by the OpenAI and AWS news, remains robust. Wall Street analysts hold a strong buy consensus for Amazon, with an average 12-month price forecast of $262.45, indicating a predicted upside of nearly 18% from current levels. The highest forecast reaches $305, while the lowest is $195, providing a wide range of expectations. To examine this recent recovery in more detail, let's zoom into the 15-minute chart, specifically from August 4th's low to the present. Here we can clearly see the strong buying pressure that emerged after the sharp decline. The low on August 4th formed a crucial short-term support level around $211.65. The subsequent green candles, accompanied by significant volume, indicate aggressive accumulation as buyers stepped in. This rapid bounce from the $211 area highlights its immediate importance as a robust support zone. We can also identify minor resistance levels formed during this ascent, particularly around the $215 to $216 range, where the price consolidated briefly before pushing higher. The market's quick absorption of the negative news and the strong upward movement on these shorter timeframes are positive technical signals for the near term. Switching to the 1-hour chart gives us a slightly broader view of this rebound within the past few days. After the deep plunge around August 1st, the price found its footing and began its ascent. The $220 mark acted as a psychological and minor technical resistance during the recovery, but Amazon managed to push through it. This level could now transition into a new immediate support zone. The current price action shows consolidation around the $221 to $223 region, indicating a battle between buyers and sellers after the strong move. Volume during this consolidation is moderate, suggesting that while the initial buying surge has tapered, there isn't overwhelming selling pressure either. This period of stability after a volatile move is common and can precede the next significant price direction. Returning to the 1-day chart to assess the overall market structure and key price levels for both short-term trading and long-term investing. Looking back, the $180 to $185 range acted as a significant support zone earlier in the year, particularly from April to June 2024. Conversely, the $230 to $235 area has presented notable resistance, which the stock struggled to break above in July 2025 before the recent sharp decline. The current price of $223.13 places Amazon right in the middle of this range. For short-term traders, the immediate support is at approximately $220, while resistance is the $225 to $230 area. A clear break above $230, ideally on strong volume, would be a very bullish signal. Conversely, a sustained move below $220 could indicate a retest of the $211 low. So, what are the reasons to be bullish or bearish on Amazon from here? On the bullish side, the strong consensus buy rating from 49 Wall Street analysts and their average price target of $262.45 provides a compelling long-term outlook. The recent OpenAI collaboration and ongoing AWS investments represent strong fundamental growth drivers that could fuel future revenue. The swift rebound from the $211 support level also demonstrates the market's underlying demand for Amazon stock and a buy-the-dip mentality among investors. From a bearish perspective, the prior earnings guidance miss and the sharp drop it triggered remind us of potential volatility. The $230 to $235 resistance zone has proven to be a significant barrier in the past and could continue to cap upside in the short term. A failure to break this resistance could lead to further sideways consolidation or even a retest of lower support levels. In terms of trading strategy, for short-term opportunities, closely watch the $220 level as immediate support. If it holds, a move towards the $225 to $230 resistance zone is likely, offering potential for swing trades. A confirmed break and sustained close above $230 would open the path towards the analyst's average target of $262.45. This move would be reinforced by increasing volume and positive broader market sentiment. Conversely, if the $220 support fails, the stock might descend towards the $211 level and potentially even $195 if the bearish momentum accelerates. Long-term investors might consider accumulating positions on dips towards significant support levels, aligning with the overall buy rating. Look for continuous positive news on AWS growth and further developments in AI integration to reinforce a bullish long-term outlook. Keep an eye on upcoming earnings reports, as these are typically major price catalysts for Amazon. For now, Amazon shows resilience, but traders should remain vigilant for moves around these crucial price points.